Hello, everybody. This is another episode of the Wealthi podcast. And today we are so lucky to have Louis after a long time. Mate, thanks for coming on the show.
Absolute pleasure, Dominic.
I just want to give you a quick round of applause. They're all your fans. They're just waiting to have you on the show. Thank you to come back. Mate, you're a fucking rock star. You've been killing it recently, talking to lots and lots of clients, been doling out some good quality properties. You've been helping people through some difficult times. And, you know, you're working through many different life experiences with your clients, many different questions, many different difficulties. And it's great having you on the show because I feel like we can answer a lot of their questions and we can address some of the main concerns that, you know, I think they have, but then therefore a lot of our listeners have.
Sure.
So I want to talk about some of that stuff today, but then also we've got some exciting topics near the end of the show where it's a crazy topic.
It's a new time.
Yeah, it's a new dawn. We're going to be talking a little bit more about this emerging world of crypto and NFTs and all this interesting stuff that Peter brought to us a little while ago. But you've been dabbling, I've been dabbling, and we want to just talk about it. So without further ado, shall we open the floor and talk a little bit about the landscape? Like what's happening out there? What's the media doing? What's the general consensus with clients and how they're feeling?
I think that I'm dealing with a lot of different clients at the moment. So clients of all levels of investors. Some are old and young and different stages of their journey. But I think that one thing that I'm noticing at the moment is especially in today's world of such a media-filled environment, I think that the media is manipulating our clients' views on whether or not they've missed the boat, or whether or not it's too late to invest, or have they missed the time now? Do they wait again? And I think that's one thing that I'm dealing with, really, because you see things published in the media that the banks and different sort of outlets love saying that properties have run 2.4 over February, or they've 2.7% in different areas, and it makes clients come back to us, Dom, and I think you would agree, and say things like, if it's already run 2.7%, will it go again? Or are we at a top, and are we buying at the top and it's going to drop?
Yeah, so you're saying that your clients are reading the news, they're seeing that there's a lot of hype around the property market running, and it's true, but then also there's a little bit of sensationalist topics, and it's causing a bit of fear and this sense of, is it too late? Yeah,
and it's added in with all the, the news is always, it's got some positive things in it, but it's also filled with a lot of negative news and material, and it can manipulate, moods and feelings, and, the auction clearance rates, and we're looking at the highest prices that we've ever been, and it's, I think our clients are being educated, and they're slowly learning that if you hear these numbers and these stats and these figures that property prices are at their highest, yes, they are, and auction clearance rates are at their most, of course. These are stats that, they're not wrong, they're not lying. But I think that one thing you got to take into consideration is that the areas that run the fastest or the quickest or first are, your Bondis, eastern suburbs, Double Bays, Vaucluse. These property prices are always going to be able to rise, and they're always going to run first, and they're always going to be, have the highest percentage. But I think there's still, what we're trying to educate our clients is there's still areas that we identify that haven't even been touched yet. Like it's almost like an uncut gem.
Yeah, that's very interesting. So we see the media on a lot of the top performers. We're seeing price growth in some of the leading suburbs and some of the leading types of real estate. However, the opportunities finding the uncut gems, finding, the diamond in the rough, and looking for the stuff that hasn't run yet. Yeah.
And the media will say New South Wales or Victoria as a whole.
Or inner west.
What does this mean? And people will say, well, if I can invest in regional New South Wales, I'm not saying it's a bad investment, but why wouldn't I not buy something out there for really cheap if it's going to grow and run and things? I said, well, I had to sort of explain to one of my phone conversations the other day. I should say that we got to understand where the growth comes from, and we always talk about it. We look at employment, population, infrastructure, and we look at the area itself. Has it grown before? What's it doing? What's happening within the area? So I think that one thing new investors should be careful of is, or investors in general, is that listening to the media might not be the best form of education. I think it might be doing your own research, of course, and looking at different stats and datas and trend and market trends. That's all good, but taking one source from what you see on the telly or on the radio might not be the safest way to judge whether or not you should get into the market now or whether or not you should wait or what you should be getting into.
And look, just to be clear, you should feel that fear of missing out. I know I'm sounding like a salesperson right now, but the market is running. However, don't let it cause you any unnecessary stress, anxiety, or to make rash decisions. And don't just follow the sheep. Don't follow the herd.
No. And we always get the question, have I missed out already? Or is it too late? And or is the boat left the dock, or is the ship sailed? And
there's a few ways to answer that, right?
Yeah, my personal opinion about it is that I don't think you can miss it. I think you might mistime it, but I don't think you can miss it. I think it's time in the market. I think in today's world, if you invested in 2000, you might have had some ups and lows, but you're always headed in one direction.
Yeah, I think there's another way that you can, if you're going to use that metaphor, I think there are many boats. And I think that people have missed some. They've missed some opportunities.
Of course.
But there are always other opportunities. There's always something that you can weed out. I think that don't use as an excuse not to do anything.
Yeah.
That's the main one. Just because you've missed that boat, don't let that dissuade you from not moving forward. I had friends that missed a huge portion of the boom in 2000, and like they saw 2013 the market had run. They saw 2014 the market had run. And like, oh God, the price is already going. They're at all-time highs. I've missed the boat. I'm going to wait for the prices to now come down. They were very wrong. Get in, you're saying.
Yeah, I think get in and then stay in as well.
Yeah, stay in. Don't day trade. Don't flip. Just get in.
Get in. The flip mentality, I think, it might have been an older generational thing, like the buy, increase, sell, buy again. But I think now that in today's world, I think having more is better than having one or two.
Yeah, I think also that it comes down to their experience as well, because you're working with a lot of time poor professionals. Yeah. Like the clients that you're working with, I don't see how the hell they're going to be able to, earn the wages or the salaries that they've got, or look after, 3 kids, drive them all to school, take them to taekwondo, soccer, run their full-time life, look after the household, and then on top of that, go find a property, renovate it, flip it, pay all the entry costs, so the stamp duty things, and pay all the exit costs, the marketing, the agent's fees, the tax, and then do it all again. Like, that's a full-time job doing that. So unless you're doing it full-time, I wouldn't be looking at that.
No, I wouldn't be. It's funny how, when you say that, most of our clients want to set and forget, buy, and I think buying property, or the idea of buying property, is really glamorous. Like, people talk about, it's easy to talk about. It's harder to do, but it's not. I think people they come unstuck when we talk about buying property. It's I want to buy this year, I want to do this, or it's very easy to talk about. Taking the first step is always I guess with a lot of things in life, taking the first step's the hardest.
It's very glamorous in some ways, but also unglamorous. Like, it's very glamorous. I think where people come unstuck is when they get caught up in the romanticism and the glamour. And what I mean by that, like, I heard you talk about some of your clients, and they enter it with this sense of romanticism, where they want to buy this beautiful looking thing that looks this way, and it has like this kind of, terrazzo tiles and whatever. And look, this is all good. That stuff is good, but it suits a type of purchase. It suits a price point, I think people get caught up in the glamour, the romanticism, more than what they should be thinking about, and that's the numbers and cents.
Yeah, I would agree. And I think that's because they have, when you're sitting around a dinner table, or you're talking to your friends, or people have different opinions and different ideas of what they want to buy, or how, what they want to do, or their journey, and that's where the the romanticism comes in, because it gets mixed in with someone buying their own home, maybe.
They're using the own home emotional,
the attachment, right? So, and then if you're sitting around a dinner table and there's 7 people saying how their stone top benches or their door handles need to be this way, and then you start thinking, well, I'm about to buy. I was thought about buying this place, but it doesn't have all these, and then they're getting into almost a fight with an owner-occupier piece of stock, which we're finding today especially we touched on it before, the auctions, how they're flying and people are paying overs, and then they're competing with people who want to buy and live, and they're not thinking about the reason they even started the conversation was because it was purely investment, and now they're sort of, their whole mentality is now shifted to the left, and now they're in a category of becoming too emotionally attached, and the glamour of buying a property becomes like their baby, which is always should be. Don't get me wrong. If you want to buy a home and you want to live in it, and that's your dream, buy one and forget about it, and you want to make it perfect, then I think that there's definitely a lane for you to do that.
Yeah, and it may be led down the track. You should maybe buy some investments, make some cash, and then do that.
Buy your real one down the end. But what the point I want to get to is that, to go back on the price thing, I think that people are looking at areas that have already run, and particularly I grew up in the Northwest, so we look at areas pretty closely in Schofields, Box Hills, even Riverson, Kellyville, all these Northwest suburbs where, you're buying homes now for
$1.5 million.
Yeah, and I sort of grew up through the phase when we saw 650s and 750s, and it got flooded, and there was a time to invest in it. But now people keep saying, well, it was a time to invest in that suburb. Should I invest in it again? And I don't think it's the best idea, but then they get pulled in with these people who want to live there, and they want to have they've already bought a couple of investments, and they want to have the Northwest lifestyle, like really nice schools, family areas. It's a really nice suburb for young families to grow up in. But that mum and dad are going to pay $200,000 over an investment price, or where the numbers stack up, where to make it feasible.
I love what you're saying. You've got clients that are looking in these markets, and they are competing with owner-occupiers.
And it's a game they can't win, because a mum and dad it's like anything. Like if you really want something and you're going to use it for that purpose, you're going to buy it, and you're going to find a reason or find a way, and get desperate and pay another $300,000-$400,000 over. That's a stretch.
Well, what price can you put on your family's security, your child's
dream home?
Yeah,
and we see these. They get clumped in together, and then, for example, one of our clients here who was dealing with our other investment specialist, Sam. We just kept getting caught up in these conversations of people going to auctions on the weekends and hearing property prices, reserve prices 1.1, then you're paying 1.3, and they think they can go and buy a great investment property. No wonder. But if you do your cash flows and your analysis and the data on the commerciality of the property at an investment level, you'll find yourself quickly, falling out of your shoes if you're paying that little bit over.
Yeah, you're priced out.
And
the feasibility's broken there.
Yeah, and it's a game you're always going to lose. And I think that's one thing that in today's market that we're talking about a lot, is because people are identifying, to go back on what I said before, looking at areas that have run before and have been really good areas to invest in, but I just don't think they're the right areas to invest in now.
Yeah, it's a good point, especially if you're looking at how much you're willing to pay. Which I want to deviate. We've got I want to sort of touch on the topic, because you've just reminded me of what I think to us can be not the worst client, because none of our clients are the worst, but the worst frame of mind or headset that someone could be in when they're purchasing. And I think I fall victim of being this type of person, where you've got a large sum of cash. So we deal with some clients, and they're in the east or the north or whatever, and they've got $400,000-$500,000 in cash.
Yep.
They're the worst clients to deal with. And the reason why is because they've got a taste for what they want.
Yep.
They're living in a really nice area and they want that. And 2, they think that they can afford what they're living in as an own home.
Yeah.
They think because they've got $300,000 or $400,000 that now I can afford to go and spend $2.5 million, or even, you know, a silly sum of money. They're looking at homes like their dream home is on the precipice of their affordability.
It's quite pretentious, a little bit pretentious investing.
Yeah, like they think they can afford that thing there, and much to their own detriment, that's where they're going to be making huge mistakes.
Yeah, I agree with serviceability, and I think that I find it funny sometimes, and it makes me laugh because, you know, you grew up in a nice blue collar family, blue collar areas. You know, we talk to some people that our recommendations around investments are really in good opportunistic areas that may not be the most, as what we touched on before, the glamorous.
Yeah, they
may not be the idea
so beautiful
of what they're, you know, or what they can talk about to their friends and say, oh, you know, I've just got a 7-bedroom house looking over the lower North Shore, you know. But these are the ones where we've got investors who will come along. A client of mine came along and said, look, I got this amount of money. I told her, you can afford this. This is what it's going to give back to you. And she goes, let's do it.
Makes sense. Yeah.
And she's already winning. And you think that, and it makes you smile because you go, oh, well, that's the attitude I think that you got to have in today's world, because wherever you are, wherever you may be, might not be the place you're going to invest in straight away.
Yeah, that's exactly right. And I think that people forget that a lot of these beautiful, nice areas weren't always that.
No.
And time changes a lot of things.
Yeah.
You know, we're looking at those markets where they're not so sexy now. They're not romantic.
No, it's not. And they're
not romantic at all.
It sort of makes me laugh and smile because I lived through the, as I said before, I don't always go on about Northwest kid, right?
Yeah.
And it's hilarious because we were always considered, the West, Northwest, whatever. But now, buying a house and land in the areas that weren't considered romantic or glamorous, you know,
that's someome's dream.
5-10 years
wish,
ago, you can't even afford. Like, they just go, well, I can't even afford to live in an area which I thought was like, I grew up in Kenthurst, and then there's the Rouse Hills and things, and there's these big master plan community developments now, and they're, you know, Tomorrow Homes is doing the house land packages for 1.4 million bucks, and that's not overpriced. It's just where the market is for that area, you know, and that was considered 10 years ago as I wouldn't bother. I wouldn't touch it.
Green fields, I don't want to touch that.
No.
Who wants to live out there?
Yeah,
maybe not you.
Yeah, and
maybe not you, but someone does.
Someone does, and also you have that attitude. We have that attitude now about the areas that we talk about, and then in 10 years' time, you'll be rubbing your nose because you didn't get in, and then you'll be investing in, you know, another hour south or another hour north. That's
exactly right. Which means just kind of, you know, move your pride aside.
I think so. Egos.
Yeah, drop the ego.
Yeah, and there's a lot of egos in the investing world, not just in property world, just investing in general. You know, in investing seems to be high end or something. But I think that the worst mistakes you can make is not investing anything. Like, for example, you know, we moved house, a few of my friends, so I'm really close to work now. I have the luxury of walking to work, not when it's, you know, not when we're underwater in Sydney at the moment. It's not that luxurious, but I sold my car because it was sitting on the street, and it was every day I could just count the dollars, you know, just being
depreciating,
depreciating out of my pocket, and all these expenses. And I realized, I was like, if I remove all my depreciating assets, the things that aren't making me money, and I turn those little things and put them into something that's growing, whether or not that be doubling in a day or whether or not that be slowly growing, I think that's where I'm now on the investment journey myself, is where if you can invest in a lot of things or different things, like we want to touch on a few things like the cryptocurrencies or NFTs and these new age style investments, I think that's where we can make a lot of money this year as well.
Yeah, and you know, I want to let's talk about that, because look, we believe in a diversified investment portfolio. Mm-hmm. You know, that's going to consist of some property. It's going to consist of some shares, some managed funds, and in this modern world, we are now looking at this whole new investment vehicle, which 3-5 years ago you would have been crazy to get into it because it was the early movers. But now it's ubiquitous. You know, the market cap of Bitcoin is tremendous. It's huge. It's not a fringe investment now. It's well and truly a store of wealth. But then there's all these other coins. There was mini market coin bubble and crash, and then there's there are a new form of investment. I don't know if any of you have heard this, but NFTs, and that's non-fungible tokens. And we're going to talk about this more. I'm not the expert. We're going to interview some experts, but my understanding of an NFT is effectively money is fungible, where you can trade my dollar for your dollar and they're both worth the same value. Where if it's non-fungible means that it's one of a kind, it's unique, it's like a piece of art, it's you can't trade it for equivalent value of something else. Now, what we're seeing in the market today is people are creating digital assets such as artwork. This gentleman called Beeple, I think it's BEEPLE, sold a piece of artwork for $66 million. It's a digital piece of art. You can go and look it up. So you can go and enjoy it and see it. But you can also see on the blockchain who bought it, how much they paid for it, and what it's all about. Now, there's this whole new emerging market of non-fungible tokens, and it's a new investment class.
It is.
Coins are a new investment class. Now, I'll just dabble on a little bit further, where in this investment class, there are a number of opportunistic plays. You might hear your friends and family talking about it, where everyone knows somebody that's made millions in this space.
Yeah.
However,
it's dangerous.
However, it's extremely volatile.
Yeah.
If you're going to jump in this space, one, I'd suggest you do your research, understand what you're investing in.
Lengthy amounts.
Yeah, do your work.
Read and read and read and read and watch.
And two, be prepared to make investments or take a gamble that you're prepared to lose.
Of course. And also, I think going with an open mind as well. Because you can be very, I think the world of the cryptos and the NFTs and this new, and we're going to see more. Like we're going to see,
this is the beginning.
This is we're in. If you're talking about it now, it's still in the baby stages of its life, right? I mean, if you look at, there's a cool video on YouTube that there's a guy, he records himself, and I believe it's 10 or 12 years ago now, and he's recording himself on his computer. And he's got a dodgy camera set up behind him, and he's sort of vlogging almost. And he's talking about, he goes, look, today's the day. Bitcoin marks $100 of value, and it's the first time it ticked over $100. And now we know it. I couldn't track it now, and now we know it's at the value. I think it's at 65,000 Oz, or we're cracking the 50s in the $50,000 mark, right?
Yeah.
But if you look at that's impossibly. But now, and people think again, we almost touch on the we go back to touching on the missing the boat. Have I missed the boat of Bitcoin? Have I missed the boat of the cryptos or investing in property? And to sort of come full circle is that you haven't really. Like I can't tell you enough. I thought I did, then I started doing it. I thought, my two friends who are right into it at the moment, we have our little group chats. We talk about cryptos now. What are we investing in? What do we like, and how we do it? And then the more we realized, the more our eyes were open to the opportunities that were coming on, available this year and next year and the years to come. And the more that we educated on ourselves, we realized that our sort of end goal, really, not to spoil it, would be to invest enough in crypto, make a good portion of money, not life-changing amounts, but enough for us to go and then turn that money into buying a property deposit, or getting that enough money, sum together then to go buy something that I talk about with my clients every day, And I think that sort of changed my attitude toward investing. If I can invest my way to an investment, well, then I've got to, then I'm actually doing okay.
Well, yeah, and Louis got spaceship, he's got shares, he's got a whole host of, he's got cash, he's saving, he's got a number of different investments, and he's using a portion of his portfolio, as am I, as am Peter, as are a bunch of the guys and girls, where we are, as you've said, we're being open-minded about this space. Yep. Open-minded but not naive.
Yeah, I agree.
I think it's new. It's emergent technology.
It's risky.
It's risky, but I think it's foolish just to thumb your nose at it.
Yeah.
You know what I mean?
I think that's what people did. I like to look at it on the timeline of investments, and I like to think about, we came into the 2000s, and then the people snubbed their noses at Facebook, and then the people snubbed their noses at Apple, and then we came.
People snub or thumb their noses at the internet. The internet. It started the internet, then it was the social media, and then it was like,
and then we came into the
podcasting, videos,
apps.
So
then
App Store.
Like Gary V, if you haven't heard of Gary V, I'm sure you would have all had
Gary Vaynerchuk.
If you're listening to us, you would have heard of Gary V. But he tells a funny story about getting offered to buy into an app that was that sent randoms over to your house to pick you up and take you somewhere, and he just couldn't wrap his head around. He said, why would someone want a random to come and pick me up and take me somewhere? And
why not jump in someone else's car?
Yeah, and obviously it was called Uber, right? So then he missed the boat on that, but he laughs about it today and says,
but I think he invested in like Facebook and Twitter and a bunch of other great stuff.
He's a billionaire, but his attitude now, which what I really like, is that he's into Pokemon cards now, or he's into the NFT markets. He will never ever close his eyes to something because he thinks he's too big for it.
That's right.
He still does this thing on, he has a little YouTube segment where he goes out and he flips things. So he'll go out to garage sales and he'll buy, little tokens or little bears that he saw that he can sell on eBay for $10 to $15 more and flip tables
Christmas
and chairs.
Decorations. And
you just think that, and he goes, look, if I'm doing it, he goes, I'm not too big for it. So you can make some money here flipping. I know we're running off topics and whatnot, but
no, we're not.
I think it's really cool to speak about. Well, at Wealthi here especially, we talk about property every day, but I think that the more we can open our minds or open the people who listen to us, or open the people who we talk to and the people that we want to talk to about Wealthi, is that we've got a whole range of, ideas and things that we can utilize to better ourselves as an investor as a whole.
Well, it's for us and for me, I feel like Wealthi for us, it's a way. We fundamentally believe that anyone can be wealthy if you want it. Mm-hmm. And then the definition is up to you. Peter's definition of being wealthy is being able to walk his kids to school. And, my definitions of wealthy are a bit more loftier and materialistic. But that's fine. Like whatever your definitions of wealthy are, that's up to you. And if you want to put the effort and the work in, you can be that. And we don't want to be naive enough to say that it's only property that you can make money in. No. You can do it in so many, many ways. And we want to broaden our scope and our podcast and our influence to encompass more than just property. We want to bring you different thoughts, ideas, people, resources, so that you can broaden your scope and fundamentally change the way that you're living your life so that you too can be wealthy, whatever that definition is.
Yeah, whatever you may define it as. I think that everyone can be it, though.
Yeah. So with all that said, Louis, how do you want to wrap up? What are your parting thoughts to your current clients, people that are listening, that are watching? What do you want them to take away from today? What's some of your closing thoughts?
I'm not saying we're always right,
hey,
but I
haven't seen any issues yet.
No,
so
but
I'm not on wood.
I'm not saying we're always right, but I think that the more we talk to people, the more that people listen and they do their own research. I think that our business and what we talk about and what you guys talk about on the podcast and what Peter talks about and what Jody talks about to the people that first come in, I think that the more people understand that our business is see-through, like you can look through the windows here and you can see every piece of data that we collect. You can see how we collect it and what we do with it and how we've come to the conclusion of our advice. I think more and more people are now coming to the fact that they're feeling safer to talk to us. They realize that, we are putting in a lot of work to do this. And the reason why we've had, I would say, 100% success rate and success with advice we give to investor clients, I think it's derived from a lot of back-end data.
A lot of work in the background.
Yeah. And I'm not saying, and as I said, I'm not saying we're always right, but I think that people should, and people have come to start listening a little bit more, which is nice.
Well, I mean, it's a testament to you. It's a testament to the team about how patient and diligent you are. The work that we're doing. We have our own, acquisitions manager, but we all get our hands dirty. Every single person in this office gets their hands dirty. And what I mean by that is we like to get out to sites. We're all passionate about what we're doing, and we want to know. We want to know the angles, because more than investing for you, we invest in these assets.
Yeah.
We are buying.
We argue. We
butt
heads.
We fight to get the best result, because if we wouldn't buy it, then we're not going to tell you to buy it.
And the meetings we have behind the scenes, I think that it's not. We touched on the word glamorous. It might be the word of the podcast today, but our meetings aren't glamorous. If someone says, I think this is a good idea, it's not met with pats on the back and how good's your work.
No, I get shot down all the time.
It's criticised heavily, but that's what I think that is allowing us to feel that the confidence to tell other people to do it. And I've learnt that that's probably the best way to handle what we talk about in a regard of giving off advice.
Having an open forum conversation, laying out the facts as we see it, and we welcome criticisms and judgments, and an open conversation discussion about what is the best outcome.
But I digress. Points. There might not be a boat to miss. I think just get on the boat and stay on the boat.
Yep.
In the moment, I think that do your own research, and own research with property, own research with the new world of investing, the cryptos, the NFTs, all these different forms of investments that we're open-minded about, and be open-minded about. Don't close your eyes. And then I think that investing does get harder as we get older. In my sort of personal circumstance, me being 24, my mother always tells me I don't have a lot of responsibilities, so do a lot of things, while you can. And I think that getting older, and you're never not too old. Don't get me wrong. You can invest whenever you like. It's not a game that has a closed door. But I think that the quicker you do it, the best day was yesterday. It's an old saying, but I think the quicker you decide to make the decision, and there's another old saying I will say that more money's lost than indecision than it is, with the wrong decision. So.
I agree with everything you've said. I'm a decade older than you, and you're right. As time goes on, things get harder. Life changes. You have kids. Get married. You get debts. Life gets more complicated. You get more responsibility. So get in while you can. And again, 34 is young, 44 is young, 54 is young.
My dad's 64, and he just bought his first portfolio of cryptocurrencies.
There you go. So have a crack. Keep your eyes.
Screenshots every day about how they're going up, and I go, yeah, we told you this 2 years ago, mate.
So look, for me, I want to say, mate, you're doing a great job. Thank you for jumping on the show.
Pleasure.
We really appreciate the what you bring to the table. And for all of you out there, again, be open-minded. Listen to the things around you. But don't be naive. Qualify. Do your own work and do your own research, and don't be afraid to reach out and say, hey, give me a helping hand. So thank you. Any questions, thoughts, ideas, send them to us. And I hope to see you on the next show, and we'll catch you all soon.
We'll see you soon.